Okay, let's talk about this last topic for the day. This was some controversy as I woke up this morning. Did not expect to see this. We've got some insider selling. We got Alexander Moore, who sold 21,000 shares. Not a big deal. 434 grand.
Sell it all.
Heather Palantir. Wow, what a last name. Palantir sold 20,000 shares. No big deal. That's whatever. And then you got Shyam Sankar, our boy, our CTO of this company, selling 1.9 million shares at $20 on the dot. Pockets $40 million. And he only has 1.3 million shares left. So he sold about a third or 2/3 of his entire position. Now, on first glance, you see this and you're just like,
Holly.
before earnings, like, this guy, what the fuck is going on? Like, what's happening? And then thankfully, for the love of God, Shyam actually shared some analysis. He says, I exercised and sold 1.967 million options as a part of a scheduled 10b5-1 plan. This is important because if he was selling right before earnings outright, which I don't even think is legal, that would be a really bad sign. And I took all the after-tax proceeds to exercise and hold as many options as I could, which is 1.4 million. So he sells 1.96 million options. He has 1.4 million shares left after he sells all the taxes from receiving capital gains on those options. And he puts all of it, he capitalizes the word all, of the proceeds that he made after taxes into 1.4 million new shares of options. He probably got those options at like $1, $2, maybe 0.05 cents, right? These are options that he got from his 2032 plan. These forms are confusing and really need to be redesigned. So he did not make any actual profit off of these sales because he took all the proceeds and put it back into his options. Any thoughts on this, or is kind of a nothing burger?
I think a lot of people that give complaints about these sorts of things have never been awarded stocks as part of their normal compensation. If you evaluate how much tax that is that he had to incur based off of, let's just take 500,000 shares, because he went from 1.9, let's just say million shares to 1.4, let's just say 500,000 shares times that by 20, that's $10 million. Do you think that he has $10 million sitting on the side to pay this in cash? And I would say, a lot of times people don't do their full due diligence. I get awarded shares as part of my compensation as well. And, I would have to sell a portion of them, if not more. And in fact, I think, let's just take, for example, I get awarded some of those stocks, right? Let's just say I get awarded 1,000 shares of UDOC. By the time they actually get awarded to me, sometimes I'll actually end up in the account 700. They will automatically sell a portion of them for me, which kind of sucks because, what if I wanted to, pay the taxes out of pocket, right? So sometimes companies do interesting things. It all depends on who manages the contracts, right? And who, Fidelity manages mine. And so they automatically take out, let's just say 30% of all the shares that I get awarded once they get vested to me. So, not too dissimilar for what Shyam had to deal with, right? It could have been something where they automatically awarded those things to him and he ended up having to basically pay, about 25 to 30% of that in taxes. And now he reinvested that money back in. So it doesn't seem too dissimilar to me. And I think it might be confusing to those who have never really been awarded stock options before.
Well, I've never been awarded stocks, so I struggle a little bit to fully grasp the dynamics. I would say that sale actually is a bad sign from how it is looked without any way. Like, also his comment, maybe you fully grasp it, but from my point of view, I still failed to grasp. Okay, you had some options. You say you executed, but obviously you pay taxes on part, so the proceeds are less. And then I don't fully grasp. I bought and hold the most amount of options, and then you say you are long 1.4 shares. So for me, that's extremely confusing. So at the end of the day, frankly, I don't care what Shyam says about his shares. I think if he had that condition at 20, to me, is a piece of information. Maybe at 20, he's that's a price he's reasonable. he wants reasonably to cut part. That's how I see it, without getting too much into the dynamics. Is this actually very worrying? I would say it's just a piece of information. If you could share the screen, please. This was from May. Our friend Chris Patel shared, CFO is selling shares on the run-up. That's
all it all. We lost you again, Arnie.
We lost you, Arnie. Your audio.
okay. The shares were $11 per share. You can see here that the CFO basically sold half of his position close to the bottom. Like we are 2x the price now. So if what's happening with Shyam has the same impact the CFO selling had, I would be happy with. But so the end point is
Did we lose him again? Yeah, Arnie, we lost your audio again. You're like programs. You have a ghost in your house. It's like pressing the mute button. There you
so
go.
now you're back.
About these things.
Go ahead, Matt. Go ahead, Matt. Go ahead.
Okay. One of the I think people don't necessarily understand is, like, for example, let's just take, so I think the private sale price of Palantir was in the $5 to $6 range before they went public in 2020.
Yep.
So let's just say, for example, these options were awarded in 2018 or 2017, and they were going for $2 to $3 a share back then. Now they're worth $20. So he's basically sitting on, just like if you're familiar with options, he either has to exercise those, sell them, and I think he had to wait until they might have been waiting until 2030. What he might see is a good opportunity now to take the $18 per share sort of option price that he can execute, pay some taxes, buy shares. And another thing is maybe he wants to buy shares and then take leverage out against those shares, right? You probably can't leverage out against your options, but you might be able to leverage out against your shares.
Yep.
So what he might say is, okay, well, let me buy back, $1.4 million worth of shares, which is $28 million worth of shares. Sorry, $1.4 million shares, which is $28 million worth of shares, whatever. And then take out, $2 million to be able to buy a house or something like that. You can't do that with options, right? So, it's part of that compensation package where, a lot of times people think that these CEOs are getting a base salary of hundreds of millions of dollars. And in reality, a lot of the times, just like Elon, people were probably saying, well, he's over here probably caking it in terms of salary. No, all of his compensation and all of his wealth came from the options contracts.
Yep.
So for him to be able to do what he did was either sell those options contracts, get awarded those shares, and then either sell them or do what he needed to do to buy Tesla. Or not buy Tesla, buy Twitter and God knows what else, right? So you have to think, like, people aren't going to award you or provide lending on options contracts. You need to have physical shares, something that's of tangible value. So another way to think about it. And then if he does it that way, he doesn't have to pay, he doesn't have to go to a bank. He doesn't have to do any of that. He's borrowing against himself, basically, and he's paying himself back. And bank, he doesn't have to.
I think that might have been Arnie. Yeah, no, I think what you were saying is a lot of sense. I think two things. We've seen Shyam sell out in the open market before. I think he sold 400,000 shares a month ago, and like that wasn't scheduled. So it's like, all right, I think he sold it at $8, and it's like whatever. This was scheduled. So first of all, that takes a lot of the like concern of, oh, you're selling before earnings off the table. It was 10-5B1 scheduled. Number two, he was very clear. He said, after taxes, I took all of the gains and I didn't go buy a mansion. I didn't go buy a Ferrari. I bought more shares of Palantir. I bought more options, which he might have gotten a little bit even cheaper than the options he sold for, which is part of that whole compensation. I don't know the exact details of it, but the point is he went long on more shares. I think if he had clarified, and he probably wouldn't have clarified on Twitter, if he didn't go long on all of the gains he has after taxes on Palantir, that's when we can easily say, okay, he thinks at 20 it's overvalued, and that's why he's taking some money out and he's putting it into a car or whatever. If he's taking the rest of those options after taxes and putting it in Palantir at whatever price he's putting it into based on his compensation plan, even though it's $20 right now, which means if he takes even 100,000 shares, 100,000 times 20, boom, you got $2 million ready to go. Then that would be okay. He thinks it's overvalued. That's not the case, because explicitly he says these forums are really weird, but what I did was after taxes, I took all my money and I put it back into Palantir. So this is not one of those things where you can be like, he's selling for a profit. 2 months ago when he sold at $8, he sold 50,000 shares, and we talked about it on this podcast. Yeah, he took $400,000. He probably wanted to go pay a down payment on whatever he needs to do with that money. But this is not the case. I think you're correct, Matt, that he's doing it at 20 because he's sitting on like a 10x from those options that he got at $2 or $3 probably in 2017. And he's like, this is probably the right time to exercise this, because as you said, options are worthless until they're exercised, and then you can do stuff with them. But at some point you have to exercise the option.
When you get to that high level in any organization, you get options and the board kind of says these are the thresholds you need to meet. Whether that's revenue growth, whether that's EPS, whatever. And those vest over 3 years, 5 years, what have you. And so initially when you see people come into CEO positions, it's like they'll make $1 million or $2 million. And next thing you know, people start giving them crap because then they're starting to make $15, $20 million. And it's like, okay, this is after 3 years on the job. Some of those options are starting to come through, right? And I see a lot of people give people crap about that sort of stuff, but it's like they're either meeting or not meeting the thresholds, and that's why they're getting the options, right? It's heavily based off of the stock price performance once you get to that level, not necessarily just the fact is, hey, is Matt crunching the numbers as well as he should in Foundry? All that stuff.
Yep, totally agreed. Arnie, can you say anything, or you're in the Mariana camp? Can't say anything. Let's hope her speaker is good this time on earnings. I have a feeling it's still going to be shit this time.